Friends, today we are going to discuss another one most important adjustment in your holding company problem, that is your dividend. All of you know the definition of the dividend. It is a distribution of profit by the company to the shareholders. So let us come to the dividend. In generally the student faced these three types of dividend in the holding company adjustment. One is your dividend paid out of pre-acquisition profit or pre-acquisition period. Let us write for pre-acquisition period. That is the dividend. If I take an example here, suppose this is 1/1/2022 financial year, 31/12/2022. The company paid dividend on 1/6/22 for the year 2001. Company paid dividend on 1/6/2022 for the year 2021. Date of acquisition may be here, it may be somewhere here, it may be here, anywhere. So if the date of acquisition is 1/1/2022 or 31/12/2022, but the dividend has been paid for 2021, then it is a dividend out of pre-acquisition profit or pre-acquisition period. Right? Dividend is paid out of this profit or for the pre-acquisition period. This is your case 1. This is your interim dividend paid. So interim dividend means dividend for the current year, for certain period. Generally the company pays interim dividend to keep shareholders smile, to keep shareholders happy. They pay interim dividend for the current year for certain period, and at the end of the year they propose the final dividend, and the final dividend if proposed, then it is sanctioned by the AGM, annual general meeting. Then it becomes a liability. After that it has been paid. So this is your proposed dividend. So one of the dividend, this dividend is for exclusively for pre-acquisition period. This interim dividend may be partly pre, partly post, or totally post-acquisition period. That we will see in your adjustment. Proposed dividend we shall discuss in case 3. So let us consider the case 1, dividend paid by subsidiary company. I have written it S Company Limited. Please remember this is subsidiary company limited for pre-acquisition period during the year. It may so happen that it is correctly recorded by the holding company. It is not correctly recorded by holding company. Holding company credited this dividend, pre-acquisition dividend, to its profit and loss account. Generally, you will find these sort of adjustment in most of the problems. So we will learn both of the thing, but so far as your problem is concerned, generally they tell you the dividend wrongly credited to holding company to its PL. So we shall deal with this situation. Now let us come to that is pre-acquisition dividend. This pre-acquisition dividend is generally paid out of profit and loss account of pre-acquisition profit. So the nature is your capital profit distribution. Since it is a capital profit distribution, friends, it should be credited to cost of investment by the holding company. The holding company, now I am explaining you the case 1 in detail. This is the holding company and this is a subsidiary company, right? S company. Now this holding company hold 60% share in subsidiary company, and in the holding company balance sheet it is shown that is 6,000 shares. This is an example, 6,000 shares of S Limited at rupees 1 lakh. So in the asset side of the holding company, you will see there is a investment of rupees 1 lakh, and the holding company is holding shares of subsidiary company, that is degree of holding is 60%. Now the subsidiary company has capital of share capital of rupees 1 lakh, and it is declaring paid dividend at a rate of 10%. So if the subsidiary company paid dividend at a rate of 10% for the pre-acquisition period, pre-acquisition means before acquiring the share period, before controlling the share period. So if the holding company is paying dividend, subsidiary company is paying dividend for pre-acquisition period, then it is a distribution of capital profit to the holding company. In this case, the correct adjustment, that is the holding company should credit the cost of investment here. The holding company, when the dividend is received, it may be received by check, so bank account debit to cost to investment account. This is the correct entry the holding company should make. Instead of that, if it is a correct entry, sometimes the holding company wrongly credited the dividend to profit and holding company PL. In such case, the entry passed, the correct entry is bank debit in the books of holding company. This is the entry, bank account debit to investment account, investment in S Limited account, that is subsidiary company investment account. So if the company, this company, S company, 10% dividend on 1 lakh, the dividend amount is 10,000, 1 lakh into 10%, and 60% is held by holding company. Therefore, it will be, this is an example, this will be 6,000 and 6,000. This is the correct entry. But generally, if it is a correct entry, the investment will be reduced by 6,000 in the books of holding company. But generally, you will face this situation, wrongly credited to PL. So if there is a wrong entry, then the entry will be bank account debit to dividend account, again dividend account debit to PL account. I am writing the straight entry 6,000. So generally they will tell you it is wrongly credited to profit and loss account by holding company. So in that case, investment account has not been credited. PL account has been credited. So PL balance in the books of holding company will increase and investment remain unaffected. So in this case, the rectification entry bank account debit bank is correctly debited. Now PL account incorrectly credited. PL account credit, we should debit it to make it correct. So PL account debit. If we debit the PL account, the holding company profit will reduce to investment account, account 6,000. So this is generally the entry we make. So if it is a correct position, then the holding company has reduced the cost of investment. After 6,000 credit, it will be 94,000 in the balance sheet. If it has not credited the investment, it has credited the investment to PL, then this is the entry they passed. This is wrong entry, this is entry passed, and rectification will be PL debit. PL is naturally a credit one. If we debit it, then PL will reduce. And investment is naturally a debit one. If we credit it, then investment will also reduce. Right? Now let us come to an adjustment here. So this is your case 1 adjustment, and let us take the date of balance sheet is 31/12/2022. This is the position holding company 31/12/22, 6,000 shares in subsidiary. Cost of investment is here 80,000. This is the cost of investment. You can find this type of figure in holding company balance sheet asset, and PL is 75,000 of holding company. In case of subsidiary, PL is 30,000 as on 31/12/22, and share capital is 1 lakh. Date of acquisition 1/1/2022. That is at the beginning of the year I have taken. We can also take at the middle of the year, we will take it later on. So adjustment will generally be as follows. All these things will be given to you in the question. Balance of PL rupees 15,000 as on 1/1/2022, on 1/6/2022 or some other date. S Limited paid dividend for the year 21. This is important because 21 is the previous period from the date of acquisition. Therefore, 2021 dividend is a pre-acquisition dividend. It is a capital nature. So sometimes the year is given, sometimes they tell you last year, for the last year. So if it is 10%, so with this information we will come here, that is PL was 15,000 at the beginning of the year. From the 15,000 we shall pay dividend 10%, 1 lakh into 10%, it is 10,000. So dividend paid is 10,000 for pre-acquisition profit. So remaining is 5,000 that we take in the pre-acquisition, and this 5,000 become 30,000 at the end of the year. So 5,000 was the profit after payment of dividend for the year 2021. So after dividend it was 5,000, now it comes to end of the year 30,000. So during the year profit is clearly it is 25,000, and pre-acquisition period is beginning of the year. Therefore, profit for the year will be 25,000. Friends, there are two cases. One, the entry has been correctly made by the holding company. In such case, you need not have to do anything. You have to do this only, and cost of investment will be 80,000. Pre-acquisition dividend not to be deducted because it has already been deducted. After 6,000 credit, 80,000 is given. So you need not have to do any other thing, only you have to do this one. You need not have to deduct rupees 6,000 because the entry is correctly made, and in cost of investment has been reduced by 6,000. After reduction only in the balance sheet 80,000 is given. This is the position if it is correctly entered by holding company. If it is not correctly entered by holding company, rather it is credited to the PL of holding company. It is wrongly credited to the PL of holding company. In such case, we shall holding company PL was, say example, 75,000. 75,000 includes the 6,000 because it was credited to holding company PL. Now we will deduct from 6,000 from 75,000. It will come to your 69,000. Right? This 69,000 will come over here in case the holding company made a mistake in crediting the same to your cost. So here also the cost of investment 80,000 is given. We will deduct the pre-acquisition dividend because it has not been deducted from the cost. So friends, to reduce this cost of investment with 6,000 and also reduce the PL of holding company in statement 4. Generally we are doing in statement 4, this is statement 1, analysis of profit, so this is the position over here, right? Sometimes we can change, we have taken the date of acquisition on 1/1/2022. We will take another one, that is your, this is A, adjustment A. So this is the information, adjustment A. Now we will change the date of acquisition to certain other period, and let us see what happens with the same adjustment, right? So friends, this position is over. Now I am talking with another type of adjustment, that is date of acquisition is say 1/7/2022. So if the date of acquisition 1/7/2022, let us take the date of acquisition to 1/7/2022. That is pre-acquisition is 6 months and post-acquisition is also 6 months. If the date is say 1/4, then it will be 3 months and it will be 9 months. So friends, I have taken 1/7/2022, that means pre-acquisition is 6 months and post-acquisition is 6 months. So what will be the change here? Now this is 5,000, this is 30,000. So profit during the year is 25,000, out of which 12,500, that is 6/12. For 6 months it is 12,500 is pre-acquisition profit, and post-acquisition profit is also 12,500, because during the year profit will be distributed between pre and post-acquisition period 6 months, 1:1. So half of the profit will come over here, half of the profit will come over here. This is the distribution. And if the company has correctly entered the investment, that is pre-acquisition dividend, you need not have to less it here. And you need not have to less it here also, because the cost of investment has correctly been credited, right? Cost of investment reduced correctly. If it is wrongly credited to profit and loss account, so friends, the things will be same here. It will be 6,000 will be minus, here also 6,000 will be minus, because 10,000 60% degree of control, 6,000 is minus here and minus here, right? Only difference is here, that is profit is distributed between pre and post acquisition. Similarly, if we take the acquisition to the last date, the date of acquisition will be the 31/12/2022, that is last day. In such case, friends, you will see the pre-acquisition period is 12 months. So this 25,000 will come over here, and post-acquisition nothing will come, because date of acquisition is 31/12/2022. Therefore, the total 12 months is a pre-acquisition period, and 25,000 will come over here, and nothing will come in the post-acquisition period. All the things will become over here 25,000. So, with this, I have told you, if the date of acquisition at the beginning of the year, what will happen? If the date of acquisition middle of the year or in between the year, the profit will be distributed in the time ratio. If the date of acquisition is at the end of the year, then what will happen for this particular adjustment? So this is pre-acquisition dividend. This is complete, and we will come to the interim dividend. This will be our case 2. Friends, this is a adjustment for case 2. You have done the case 1, now it is case 2, interim dividend. Interim dividend means dividend for the current year, that is current financial year. We have taken the adjustment like that. S Limited paid interim dividend on 1/10/2022. This date is important, 1/10/2022. This is the payment of dividend at a rate 10%. I have not given you 10% per annum. If it is 10% per annum, the things will be different, that I will discuss with you. So 10%, H company credited the amount to PL. So the balance in the PL is 1/1/2022 is 15,000. Generally, in case of S Limited credited the amount to PL, the balance of PL on 1/1/22 is 15,000. Holding company holds 6,000 shares in subsidiary company. In subsidiary company there are 10,000 shares, 1 lakh divided by 10. And in case of subsidiary company, the PL balance is 30,000. That means here the PL is 30,000, and your PL here beginning of the year it is 15,000. Now friends, the company has paid interim dividend. This interim dividend is paid on 1/10/2022 at a rate 10%, not per annum. So 10% means 1 lakh into 10%, that is your 10,000 is the dividend. Holding company holds 6,000 share, that means 60%. So holding company will get 6,000, right? And the minority will get 4,000. Suppose it is say 10% per annum. Friends, if it is 10% per annum, you have to calculate dividend for this period, that is 9 months. So for 9 months, 10,000 is the dividend, 10%, 9 months, 9 by 12. This is 7,500 will be the total amount of dividend. Out of this 60% is the holding company share. So if it is 10% per annum, then calculate for 9 months. If it is simply 10%, then it will be 1 lakh into 10%, that is 10,000. But for 9 months, it will be 1 lakh, 10%, 9 by 12, this will be 7,500. Anyhow, I have given you 10% only, so the holding company share total dividend would be 10,000. If it is 10% per annum, then the total dividend would be 7,500. 10% per annum. How to calculate? We have to calculate beginning of the year to the date of payment of dividend, that is your 9 months. So 9 months, 1 lakh into 10% into 9 months, it is 7,500. So interim dividend paid would be 7,500 if it is 10% per annum. But friends, in this adjustment I have only given you 10%, so 1 lakh into 10%, it would be 10,000. So 15,000 was the profit, that is your pre-acquisition profit. So this will go to pre-acquisition period. Now just you add this 10,000 here, because after payment of 10,000 only 30,000 profit is there. So if the dividend is not paid, then profit would have been 40,000, PL balance would have been 40,000 here. So what you will do, you add the interim dividend over here, that is 40,000. So 15,000 was the balance, it increases to 40,000. So during the year, total year is the pre-acquisition period, because date of acquisition is 1/1/22. This is very important, right? So 15,000 to 40,000, profit for the year is 25,000. Out of 25,000, 10,000 is the interim dividend pay. So friends, if you see, then you will see here also 15,000, here 25,000 minus 10,000, effective profit is again 15,000. So in the holding company PL, you need not have to make any change, because there is no mistake. Holding company has taken this dividend to the profit and loss account, and as it is a post acquisition profit, holding company has taken to PL. Holding company has made the correct entry, so nothing has to be done in the holding company PL. That is statement 4. Because the date of acquisition is at the beginning of the year, so total 12 months is the post acquisition period, right? So here if you see, it is 15,000, 25 minus 10 also 15,000. So 15 again 15, 15 to 30 again 15. Here also the net effect is your 15,000. So in this way you can do. Alternatively, if the date of acquisition at the beginning of the year, and you can alternatively don't do any change, ignore dividend pay. You need not have to make any change. Just 15,000 here, write profit during the year again 15,000. Because 25 minus 10, the effect is only 15,000. But if the date of acquisition should be at the beginning of the year, either this or this, you can use any of the method, and there will be no change in case it is a holding company TL, right? So let us come to the another case, the date of acquisition 1/1/22. Friends, if I change the date of acquisition to 1/7/2022, that is in the middle of the year or in between a period in the year. So this will be a little bit change. Just you see what will be the change here. Please keep in touch. This is your 1/7/22, and the dividend is paid on 1/10/22. This is the date of payment of dividend. This is your date of acquisition of share. Date of acquisition of share, right? Date of acquisition of share. So what we will do, this period is your pre-acquisition period 6 months, and post-acquisition period is 3 months. Because the dividend is interim dividend is paid for 1/10/22, that means they have paid the dividend for this period, that is 1/1/22 to 1/10/22, 9 months. Out of 9 months, 6 months is your pre-acquisition period and 3 months is your post-acquisition period. So friends, if we take 10% per 10%, I am not talking about 10% per annum, I will talk about later on. So let us consider 10%. So 10% means 1 lakh into 10%, that is 10,000 is the dividend, and for 10,000 is the dividend for 9 months. So for 6 months you have to calculate what is the dividend. So 10,000 for 9 months, 10,000, and for 6 months, how much is your dividend? So this will be your 6,667, right? So for 10,000 is for 9 months, and what is your dividend for 6 months? 6 months is your 6,667, and post acquisition period it is 3,333. So friends, if we take the profit for the year is your, here we have to, this is the 15,000, total 40,000. So during the year profit is your 25,000, but 25,000 date of acquisition 6 months, post acquisition period is 6 months. So 1/1/22 to 1/7/22, 6 months, post acquisition period is 6 months. So 25,000, the difference between 15 and 40,000, that is 25,000. This 25,000 will be divided between pre and post equally, because the period is equally divided, 6 months, 6 months. So 12,500, I am taking 12,500 here, right? And dividend paid, profit for the year is 12,500, 12,500. Dividend paid will be 6 month year, 6667. This is 3333. Right? In this way, and there is, don't go for any alternative treatment, you just try with this treatment. Okay, so this is the interim dividend pay. Suppose it is, they have told you not 10% but 10% per annum. Then we have to calculate the dividend for 9 months here, up to 1, 10, 22, 9 months. So 9 months 7,500, and we will take 7,500 into 6 by 9. 7,500 for 9 months, and for what is for 6 months, that is your 5,000. So in this case, interim dividend would be 5,000 here and 2,500 here if it is 10% per annum. Please note it down, because if it is 10%, you have to calculate it on the basis of time ratio. For 9 months, out of this 6 and 3, 6 will come here, 3 will come here. Right? And in holding company there is no mistake. If they will tell you the holding company has taken everything to PL, then the 6667 will be your deducted from the cost of control and holding company PL. Because this dividend is post acquisition and this dividend is pre acquisition. So if they will tell you it has been taken to PL, credited to PL, then 60% of this dividend, that is 6667 into 60%, that will go to your cost of control. 6667 into 60%, that is 4,000. 4,000 will go to your, it will be less from the cost of control and it will be less from the holding company PL. Pre-acquisition dividend 4,000 will be less. It was 75,000, PL was 75,000, and this 4,000 will be less here, and 4,000 will be less from the cost of control, please remember. Because this is the pre-acquisition profit will go to cost of control. So 6667 into 60%, 4,000, but it has wrongly been credited to PL. So from PL you deduct 4,000, from in your holding company cost of control also you deduct 4,000. Right? This is the adjustment. So now another one case, I will change the date of acquisition. This is the third case. I will change the date of acquisition to the end of the year. End of the year, the date of acquisition I have changed. That means your date of acquisition is your date of acquisition of share at 31/12/22, and dividend is paid on 1/10/22, say rupees 10,000. If it is per annum, just calculate on the basis of time. If it is only 10%, then you take 10,000. So friends, if the date of acquisition is here, that means the entire period is your pre-acquisition. The total 10,000 dividend is your pre-acquisition period. So if we calculate profit for the year, it will be 25,000 here, and the dividend 25,000 is the profit here, and interim dividend paid, this is 10,000 here. So this interim dividend is a capital profit. It should be credited to cost of control. If they will tell you that holding company credited the amount to PL, then PL balance you take 10,000. 10,000 6% would be your 10,000, 60% would be 6,000 here, and from the cost of control you deduct 6,000. Cost of control, cost of share is 80,000, and if you go to cost of control, cost of investment 80,000 less your pre-acquisition dividend wrongly credited to PL, that is 74,000, right? So this will be the treatment over here. So I have discussed 3 steps here: cost of acquisition at the beginning of the year, cost of acquisition at the middle of the year or in between the year, cost of acquisition of share is at the end of the year. Generally, I am telling you this particular line is not given in your problem. H Limited credited the amount to PL. If this particular line is not given, then don't make any change in the cost of control or holding company PL. If this line is given, you make the required change in both the cases as applicable to you. But if this particular line is not given in your question, only paid interim dividend paid, then please friend remember, don't make any change in cost of control and holding company PL, right? Because there is no mistake. We assume that the company accountant has made the entry correctly, right? So this is important. Then another, the last one is your proposed dividend, that is case 3. We will take, it is a case 3, that is your proposed dividend. If proposed dividend is given as a adjustment, it is given as adjustment. It is given in the balance sheet. If it is given in the adjustment, please smile, because you need not have to do anything. As per Companies Act 2013, Schedule 3, proposed dividend on approve at AGM become the liability therefore in consolidated balance sheet CBS no treatment to be made, only a note to balance sheet, note to CBS be given. Right? You need not have to do anything, just make a smile and leave that. You just give a note at the end of the consolidated balance sheet. Suppose the proposed dividend is not given in adjustment, it is given in the balance sheet, please keep it as it is. Holding company proposed dividend, subsidiary proposed dividend, you just put it in the liability side, add these two and put it in the liability side, don't touch it, don't do anything, just keep it in the liability side of the balance sheet because it is given in the balance sheet. Right? So this is all about your dividend. We have discussed most of the cases and almost all the cases we have covered. If you listen patiently and make a note, then definitely it will help you to go through the exam, to go through any problem. And dividend is a sure adjustment in most of the university questions. If you like the video, please subscribe and offer your comments. You can refer your friends also, because this is a complete treatment on dividend. Thank you. Meet you in the next class.